How we doing? How we doing? Today is Thursday, September the 19th, 2024. Just doing the real estate tap in with you for today. So, looks like August, there was a slowdown in terms of purchasing in the housing market. But I think that's because of the time of the year. I don't I think a lot of it has to do with time of the year, obviously combined with the prices of homes and things of that nature. Um, but there was a slowdown when rates actually came down. They've been coming down steadily over the last, 2, 3 weeks, last 30 days or so. But I think, like I said, because of the time of the year, kids we're getting ready to go back to school. A lot of people stop looking for homes, towards like the end of July and August on into the first of the year or even next spring is somewhat of a slowdown. So, we'll have to continue to see, what happens. But, obviously the big news yesterday was that the federal funds rate was lowered 50 basis points, half a point, and trying to see what effects it's going to have on real estate. The thing about when they drop the rates is that you have to ask yourself, if the economy was good, strong, robust, why would they be dropping rates? They're dropping rates because the information that they see that they don't necessarily allow us to see is showing some weakness. We do see some of that. We just saw a major company, the Tupperware company, file for bankruptcy. So companies are, having some issues, and lowering the rate is in an effort to assist those companies, hopefully manage unemployment. Companies from laying people off and things of that nature. But some people are saying that the Fed is going to pull off this soft landing after this, high inflationary period and trying to get it under control. There are a lot of other people that are saying that that's not going to happen. If you look at the federal funds rate back right before the GFC, it was under 4%. So, if there's any indication of where things are going, we're kind of maybe headed in that direction. So all I can say is, no matter what you think, just try to prepare either way. If you think that it's going to be a soft landing, you want to look at for certain opportunities within the real estate market that coincide with your belief that it's a soft landing. And then also, if you think it's going to be more of a harder landing, where are you looking for opportunities? We always try to bring this back to notes. No matter what happens, as a note investor or somebody who buys and sells notes, you can find success on either side of things. So I would say that people that are getting into real estate, maybe you want to understand how notes work, understand how to create them, how to buy and sell them, as a tool in the toolbox, so to speak. If you're somebody that does fix and flipping, and if you think that the market, may go down, and you have a project that you're working on, you may want to consider creating a note on it for a potential buyer in order to sell the property, so you don't have to, necessarily reduce the price, and then you can exit out the deal accordingly based on how you structure the note and how it's structured and what you can sell it for. So, just a really interesting time to see how this whole thing plays out. But the main thing I want people to understand is that no matter what side, what type of economy that you are in, notes are a good, solid investment. And if things do go downward, notes become more of a better option in down markets. Hence the GFC. You know, they were selling notes at pennies on the dollar, and a lot of people who bought them, you know, gained a lot of wealth over that time. So no matter where you see things going, think about learning and understanding real estate notes as a strategy, whether you're new or if you're somebody that's already, you know, in real estate. All right, everybody, have a good day, and we'll talk to you soon.